Hi, I'm Andy. Welcome to my channel. This is my regular update, which I do every single month, looking at the best savings accounts for you right now. And there have been a lot has happened since the last episode where I last covered this. First of all, we heard that national savings and investments, really popular place for a lot of our savings right now. It's been the market leader for a good few months. They announced that they were going to drop their rates to practically nothing in November. So that's out of the window as an account. If you've got your money there, you're going to be thinking about what you're going to do with your cash right now. We also had TSB say they're going to close down. They actually already have closed to new customers their TSB Classic Plus account, which is offering 1.5%. That was one of the highest payest accounts out there as well. Close to new customers, and that interest rate will drop for everybody else in December. So again, if you've got your money there, you might want to be thinking about, well, what do I do with that cash? And even people who've got money still with Marcus, which was for a long time the leading account, the leading easy access account anyway, that dropped its rate a few times, then it closed it to new customers, and then also just in the middle of October, it cut the rate again to 0.7%. So all these places, popular places for people to put their money, where are they going to put it? So in this video, what I'll do is I'll take you through the latest updates from the middle of October with where you can put their money and get the highest possible rate of interest that you can. That's what you want to get. You want to make sure that it's getting as much as it possibly can. But there's something else you sort of pay into consideration this month as well, is what happens if interest rates go negative. Now, this is something that's been kind of rumored for a while. It's happened in a few other countries like Switzerland and Japan. The idea that Bank of England base rates, this is our central bank, that their interest rates, which currently at 0.1%, which is the lowest it's ever been, 0.1%, potentially could go below zero, sub-zero. And if that happened, what could that mean for your savings? Obviously, lots of impact other areas. We're focusing on savings right now. Well, potentially what you could find if interest rates from the Bank of England went zero, obviously other banks would then potentially follow that, because that's often where they store their money or they keep their money in lots of times. If it goes below zero for savings, rather than you earning money, even if it's a small amount, even if it is just 0.01%, if it went below zero, in theory, you'd have to pay for your savings to be held in an account. So it would cost you money to have money in a bank, which seems ridiculous, doesn't it? Because one of the things that could happen if that was going to be a situation was people would take their money out of the bank. They wouldn't want to leave it there. They wouldn't be paying money to have your money sit somewhere. You take it out and you maybe keep it, that classic under the mattress kind of thing. They obviously don't want that to happen. So if it was to happen, and we don't know if it will, obviously last week we did find a situation where the Bank of England actually wrote to all the banks to say what will the processes be in place if it did happen, just to make sure they're prepared for it if it did happen. If it was to happen, I think it's highly unlikely that we would see all the accounts suddenly start charging you money. Now, already, as I said, right now, the base rate is 0.01%, but you can get up to 1%-ish, in an easy access account. You can get up to 3% in a regular saver account. So that's already well above that rate. So yes, we might see, in fact, we probably would see if rates went below zero at the Bank of England, see interest rates fall. But the likelihood of them charging us, I think, is quite rare. You might see it in some circumstances. So if you have a lot of money, potentially they'll charge you then. And we're talking tens and tens and tens of thousands of pounds in there, not what most of us have in our savings accounts. Then you might get a charge over a certain amount. We've actually seen this with Starling Bank. They've got a big fan of them. Check out my review if you haven't already. They actually offer a euro account, so you can hold money in euros. And that one has that already. So over a certain amount of money, they will charge you interest to keep money in that euros account. But I think it's very unlikely. Most of us, the amount of money we have in our savings, in our easy access or even fixed savings, I think is unlikely to affect us. But if you are worried about it and you don't want to sort of see potentially being charged, or you're worried about how interest rates might drop even further, because they have. Let's face it, they have been dropping continuously. Even before COVID came along, we've seen rates drop. You can't get what you could have got 6 months, a year ago, 2 years ago. Nothing like that at all. Then maybe you do have an option, and that is to fix your savings. If you did that, fix for 1 year, 2 years, 3 years, 4 years, 5 years, the interest rate that you get is locked in. It can't drop down. So that could be a good thing to think about right now. If you don't need access to your money for that amount of time, fix it. At least you're guaranteed then to get that rate. There's obviously a risk there that if suddenly things all go back to normal and everything's fine and dandy and rates suddenly shoot up, then you might be fixed in at a much lower rate. And obviously the longer you fix for, the higher the chances of that could happen to you. But we're going to be in this for the long haul here. So it could well be a good thing to think about. So in this video, what I'm going to do right now, I'll take you through some of the best accounts right now for interest, including fixed rates accounts. And also, because I've had a few requests from previous videos, I'm also going to be looking at ethical and Sharia compliant accounts as well. I'll give you a couple there you might want to look at. So what I also want to say before we get into this, obviously these can change at any time. I've got an article over on the blog, so you want to check that out, becleverwithyourcash.com, and I'll link to it up here and below. That one I'm updating on a regular basis. There's also a website called Saver's Friend, which is a great place that also has kind of regular updates on what's going on. So they're good places to check out if when you watch this, you could be 2 weeks on, those top accounts could be gone already. Who knows? There might even be something better, but I think in all likelihood, we'll see the rates fall, because that's what's been happening over the last 4 weeks and beyond. Every couple of days, the best account is replaced by a lower account because it's closed to new customers or the rate is cut. Right, let's start off with the highest paying accounts. I talk about them every single month, every single time I do this, and that is the regular savings account. Now, regular savings accounts are, as the name suggests, ones where you put in money on a regular basis. So they're not for huge lump sums. They're ones where you put in an amount of money in 1 month, and then the second month, third month, and so on. And most of these, broadly, they are for 12 months. That is how long they last for. At the end of that year, the account is closed down completely and your money is paid out. Now, sometimes people get a bit confused about regular savings accounts as well, because let's say it's 3% interest that you'll get on that account. The 3% is what you save every single month, not on the total amount as if that amount was there for the whole year. So it works a bit different to other accounts. But let's say month one, you do put in 250 quid, you'll get your 3% of that 250 quid. Month two, you're putting another 250 quid in, so there's 500 in the account. So that month, you'll get 3% on 500. The month after that, another 250, let's say, so 750 in there, and you earn 3% on that, and so on for 12 months. So just bear in mind that, this headline rate is 3%, or whatever it might be, it is factored out over the year on the amount of money you have in that account. Really important one. And again, there's more information about regular savers if you want to check it out, and I will link to that in the notes. So regular savers, the best one right now is just over 3%. 3.04% is with NatWest or RBS. The problem with it is you can only save £50 every month. And once you get to £1,000 saved in there, £1,000, you stop earning interest. So it's one of those things. If you've got a NatWest or RBS account, and you do need to have a NatWest or RBS account, I guess you may as well go ahead and do it. If you've already got a standing order 50 quid going out, there's not a huge amount of harm. But when you get to £1,000, stop paying into it. At least you've got £1,000 paying 3% at the moment. Obviously, that rate could change. The ones which are sort of slightly more substantial, if you are getting your salary in and you want to put some of that aside every single month, are a couple at First Direct, which is now open again to new customers. It's been closed since March. You can now open up a new First Direct account, 2.75% there, and you can save up to £300 every month in there. Hsbc and Marks and Spencer's Bank also offer a 2.75% regular saver, but it's only up to 250 quid, so a little bit less. They are the top regular savers. And obviously, if you've got a current account with each of those, because you have to have a current account with each of those banks to get that regular saver, you can have all three of them if you want to. Now, if you don't want to open up specifically one of those current accounts, you can get a 1.55% regular saver at Coventry Building Society. That is a variable rate there, which means it can drop, and it has dropped over the last 6 months 2 or 3 times already. So that could continue to fall down. But you can open it up and you can put up to £500 in there. And if you want to, if you've got a lot of money you want to save, you can funnel money into regular savers from another account where you're earning potentially less, but it works for a large amount of money. Okay, that's regular savers. Next up, it's the high interest paying current accounts. Now, I mentioned that TSB Classic Plus account is closing in December, so you may as well keep your money in there for now. So potentially you might consider moving it out earlier to get it into another account, but you can leave it in there for now. You'll still earn that interest until the account's closed in early December. But there are a couple which are still open. Nationwide's Flex Direct account offering 2%, I should say, on £1.5 grand. That is fixed for 1 year. So that's probably the best of all the fixes out there. Although it's on a small amount, £1.5 grand. And only for 1 year. After that, it drops down to, I think it's 0.25%, something like that. It's great for 1 year, but you can only get it once. You can only have this account at one time. You can get a second account as a joint account. So you might want to open up 3 of them right now. Potentially you and your partner have one each and then get a joint account. Then you'll get 2% on £4.5 grand for 1 year, which you can't really beat right now in terms of a lump sum of cash. There's also the Virgin Money account that is still offering 2.02%, so slightly higher, just a tinsy bit more, but only on £1,000, and it is variable rate, so that could drop at any time. What have we got after that? Fixed savings account. So I said I'm going to talk to you about fixed savings accounts in case you decide you do want to fix your money. Again, not a huge rates right now. These are the ones that really have been falling over the last month. Right now, at the time of recording this, Atom Bank are giving you 1.01% on a 1-year fix. Not much at all. And that's an indication of how far things have fallen. If the best you can get on a 1-year fix is 1.01%. Anyway, that is with Atom Bank. Now, there is another kind of fixed account. It's slightly different. It is with the Al Rayyan Bank. Now, this is a Sharia compliant bank. And I'll talk about these again in a minute. But they essentially don't give interest. They give estimated profit return. Okay? Because in Islam, you can't give interest. So they kind of say, look, we are going to give you this money. It's not 100% guaranteed, but from everything I've read about them, they do always pay out. This one is giving you 1.27% for that 1-year fix. That is a lot higher than that Atom Bank 1.01%. You just have to sort of work out whether you're willing to take that tiny risk that maybe you won't get the return. But that is the best one. Again, another 1-year fix. You can fix for longer, obviously, if you want to. Now, one of the big things about savings, which I say all the time, is you want to have a decent amount of cash which is available to you in the event of an emergency. Now, those regular savers, as I say, you can often take the money out of those regular savers, but then you lose the interest, okay? The current accounts, you can take your money in and out of them. That's absolutely fine. The fixed account, you can't really take your money out without losing the interest. So if you want that emergency fund, you want to have some of it available in an easy access account. Potentially, as I said, those current accounts are great for that, but if you've got any more than that, look at an easy access account. The rates here are really, really poor, and the rate is variable, so it can drop. And again, it has continued to drop. Now, this is slightly different. It's not a purely, completely easy access, but we're talking about emergencies here. It is a double access, which means you can withdraw money twice in a year without being penalised. So if something does go wrong or you need to take cash out, you've got 2 op times to do that. And that should hopefully be enough, because we're not talking about you need to spare 50 quid. We're talking about potentially something massive has gone wrong, like you need to get the car massively fixed or whatever after an MOT, or there's something wrong with the roof, or God forbid it, but potentially you lose your job and you need access to these savings to fund the mortgage, the rent, the bills, whatever it's a short amount of time. Anyway, Coventry Bill and Society, 0.96%. Not great, but that's the best one. Again, that is variable, so it could drop. And the thing you've got to think about here, I suppose, is if you've got your money in that NSNI, which is going to drop, you've got that money in a Marcus, which has dropped. If you move it, there is a chance you might have to move it again, but we don't know when that could happen. So I think it's possibly makes sense to kind of move it and see how things go, but it is your call to make there. Now, finally, let's talk again about, I mentioned ethical savings and I also talked about Sharia accounts. I want to talk about them very quickly. Ethical savings is something which I'm sort of getting a little bit more plugged into now, something I'm sort of getting a lot more interested in, something I need to deal with. And this is because I hadn't really realised it quite to the extent of it. I did realise, but I hadn't really necessarily put it to the front of my mind. When a bank has your money, is holding your money, it's not just sitting there in a vault somewhere. They're using it. They're using it often to lend to people, to try and earn interest at, using it to invest in places. Again, they're trying to make a return on that money. And that's often how they pay you interest, because they've got to make money. They keep some of it as profit and pass some of it on. But what that can mean, and it does mean with a lot of the big banks, is that money is going towards things that you might personally have an issue with. So that could be something such as tobacco. It could be something to do with oil refineries or oil pipelines or fracking, things like that. It could be towards arms manufacturer and investing in companies who are trading in arms and all that kind of stuff. It could be political things. So you might not want it to go in towards a Trump campaign donation or whatever it might be. So your money goes there. You don't have a say in that. They just do what they do with it. Okay, you don't have a choice. There are, however, places where they will actively not invest in some of those companies. So yes, generally your return will be smaller. But at least you know that your money isn't going towards something, again, you don't agree with, and potentially you're actively trying to do things to combat yourself by boycotting places, or even as something as easy as doing your recycling because you want to reduce waste. But then you find it's being put into something which kind of counters that completely in terms of carbon emissions or whatever. So you can go to places where it is fundamentally right. This money is going to be invested somewhere which is doing good. Now, one easy place to go for there, kind of a shortcut, is to look at a building society. Because although they don't necessarily have active ethical policies, 75% of their funds that they hold from customers has to be then lent to people for mortgages. So that only leaves 25% for them to invest in other places. A lot of the building societies are not massive, which means they don't necessarily have the funds to go out and do that. So you're likely to find that your money isn't going to be going to bad places there. So building societies have a thumbs up if you're looking at ethical savings. And obviously there are plenty of them out there. Check your local ones because they might have higher rates, which you can only get if you go into store, if you live in the area. So there might be some quite high rates available to you in savings there. I say quite high in the context of everything we've spoken about right now. Beyond that though, also, I talked about those Sharia compliant accounts. They also, as part of that kind of following the sort of the laws of Islam, they will not give money to anyone which in that same sort of thing goes against other sort of parts of Islam. So that includes nothing going to tobacco or alcohol or gambling, things like that. So often the Sharia compliant accounts are also quite ethical. So that one I mentioned before in the fix is that Al Rayyan Bank, 1.27 for a 1-year fix, that potentially is a good place for you to put your money ethically. There's also worth looking at Triodos. Now, this is the bank you'll hear spoken about quite a lot when we talk about ethical banks for your current accounts or whatever it might be. They have got a regular saver. So again, it's a 12-month fix, and that is at 1.25%. And I think you can put up to £500 into there every month. It might be £400. Again, so it's a much lower rate than the other regular savers, but you know the money that's going in there, it's being used for proactively ethical things. You know, Triodos is set up as an ethical bank, so you can even read about where the money is going. As I mentioned, do check out the blog where I have that full article taking you through all of these, a bit more details, the links to take you through to those banks and a few others that I've not spoken about right now. As I mentioned, this does change regularly, so I will update that blog post on a regular basis, as often as I can. And there are other places you can go to check things out, which are listed in that blog. Now, if you found this useful, please do hit that subscribe button and that notification bell so you don't miss any more videos. And I really, 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 really would appreciate it if you hit like and leave me a comment. And if you have any other questions about savings and what to do with them, put them below and I'll answer them in next month's video. Until next time, cheers. And here are a couple more videos you might find interesting.